First-time buyers need a car for work, but can't get financing without a credit history. Without that history, you are effectively financially invisible. Traditional banks automatically reject these thin-file applicants. They rely on historical data to mathematically measure risk, and when that data is missing, the system defaults to a rejection. This gap in the market is filled by buy here, pay here dealerships. These lots target buyers with zero credit by charging interest rates that often exceed 20%, backed by predatory contracts designed to maximize dealer profit. These dealerships often trap borrowers in a permanent cycle. Because they frequently fail to report on-time payments to the credit bureaus, your file remains thin, ensuring you stay dependent on subprime lenders for your next purchase. The FICO scoring algorithm operates as a strict, hard-coded data processing machine. It doesn't care about your story. It only cares about specific data inputs. The system's core requirement is time. It demands exactly 6 months of active, reported credit data before it will generate a score for a new borrower. By treating credit as a systems engineering problem, you can systematically build a prime credit score in exactly 180 days. Triggering the algorithm requires safe entry points, tools that provide data to the bureaus without requiring a bank to take on upfront risk. A secure credit card is the most common entry point. You provide a cash deposit, typically between $200 and $500, which serves as your credit limit. This deposit acts as collateral, making it accessible to those with no history. A second tool is the Credit Builder loan. This functions like a reverse loan. The bank holds the loaned funds in a locked, interest-bearing account while you make monthly payments. As you pay down this locked loan, the bank reports your reliability to the credit bureaus. Once the term ends, the bank releases the lump sum back to you. This chart shows how Credit Builder loans affect different borrowers. For those with no existing debt, the data shows an average score increase of 60 points, whereas the impact is negligible for those already carrying debt. Opening these two specific accounts provides the raw data inputs necessary to wake up the dormant FICO algorithm and start that 6-month countdown. The algorithm requires a full 6 months to process these inputs because it is designed to identify a behavioral pattern of reliability rather than a single, isolated transaction. This gauge represents your credit limit. Manage your utilization, the ratio of balance to limit, keeping it below 30%. Put a small recurring charge, like a streaming subscription, on the card. Paying this to zero every month provides the consistent data required to validate creditworthiness. At the 180-day mark, the algorithm will have enough data to output a score. Following this process typically results in a starting score in the 670 to 680 range. While a 670 FICO score is a massive asset, first-time buyers must also satisfy the lender's non-credit requirements to secure a prime rate. Lenders look for stability. They typically require proof of residency through utility bills and a job history of at least 3 to 12 months with a minimum income of $1,800 per month. Lenders also calculate the loan-to-value, or LTV ratio. This measures the amount you are borrowing against the actual market value of the vehicle. As this diagram shows, a substantial down payment of $2,000 to $3,000, or 20% of the price, drops the LTV ratio. This reduces the lender's potential loss if the car were to be repossessed. Pairing an engineered 6-month FICO score with a low LTV ratio forces traditional lenders to categorize you as a secure prime market borrower. Even with your credit ready, you must avoid the most common dealership trap: negotiating based on the monthly payment. Dealers often extend the loan term to 72 or 84 months to reach your target monthly price. This allows them to hide high interest rates and fees, while you end up paying thousands more over the life of the loan. Negotiate the out-the-door total price first. Only after you have agreed on the price of the car should you discuss financing or mention a cosigner. Understanding the mechanics of the 6-month FICO rule turns a thin file into a clean slate, ready to be engineered into a strategic advantage at the dealership.